Well, the current environment for credit unions is mixed. They're doing quite well as a whole, but they face some challenges. Probably the biggest new challenge the two things going on. First of all, we're now fully recovered from the financial crisis and the Great Recession of 10 years ago. So that's behind us. That really hurt financial institutions, including credit unions, and we've essentially recovered from that. But the bad part is in the aftermath of the crisis, the government imposed a lot of new regulations on financial institutions, mostly directed at the larger financial institutions that got us into trouble 10 years ago. But credit unions have borne a significant burden from having to deal with those regulations. And as a result of that, what's going on with a strong economy, larger credit unions are doing quite well. But with the new regulatory burden, that's placing a disproportionate cost or burden on smaller credit unions. And so we've got sort of a bifurcated, a broken up system where larger credit unions are doing fabulously the last few years, but smaller credit unions are having quite a hard time of it, having to deal with all these new regulations. The attrition rate, the rate at which we lose credit unions, has actually picked up since the Great Recession. Usually, when in hard economic times, that's when financial institutions get into trouble and they merge. We had something of an increase in mergers, in consolidation during the Great Recession back 10 years ago. Since then, though, the merger rate, the consolidation rate among larger credit unions has gone almost to zero. But the merger rate among smaller credit unions is actually higher now than it was during the Great Recession. And these credit unions aren't failing. You know, it's not that they get into problems with bad loans and their capital falls and they become insolvent. It's just that the costs of running the business, the costs of operating have gotten so high because of these new costs of regulation, and also technological developments are hurting too. The new technology that our members require from us in order for us to serve them are quite expensive. If you're a big credit union, you can spread that over a lot of members. If you're a small credit union, you can't. So the merger rate has increased for smaller credit unions. Credit unions as a whole are actually looking forward to some improvement or some rollback in the regulations they face. But we're not expecting anything to happen very quickly. First of all, whereas we believe it was inappropriate to place all these new rules and regulations on credit unions because we had nothing to do with causing the financial crisis. It wasn't our actions that caused the crisis, and therefore we didn't need those corrected by new regulation. We are concerned that some of the bad actors who did contribute to the crisis shouldn't have their regulations rolled back either. And it's going to be very difficult for our Congress to distinguish between those two groups. So, you know, we're not out for removing all of the regulations that came after the crisis. What we are for is removing many of those regulations from credit unions and small banks, quite frankly, who also did not contribute to the crisis. That's the first thing. The second thing is we are optimistic that there may eventually be some movement, but we don't think it's going to happen very fast. Mr. Trump perhaps didn't understand some of the limits on the presidency in our divided government. We have an executive branch, the president, we have a legislative branch in the Congress, and then the courts, and the president can't necessarily tell the other two what to do. And the laws that govern financial institutions are written by the Congress, and so Congress has to make the changes that which would affect regulation of financial institutions. And the Congress is a little bit busy right now with some of the other things that Mr. Trump would like them to do, like reforming our tax system and also changing the healthcare system. So since those two priorities come first, since they can't be done just by the president, they require congressional action. It is unlikely that we will see much change in the regulation of financial institutions, at least this year, because Congress still has those other two thorny issues to deal with.